see, man. So we are live. Hey, let me ask you real quick. Do you mind if I change the screen to a whiteboard so that I
That's
can
fine.
kind of make
Yep.
some notes and stuff
Yep. That's fine. Yep.
as we go through? Because I know that there's some agents out there, they don't own an ink pen when it comes to making notes, and I want to make sure that they get as much value out of it as possible. So hey guys, this is Jason Morris here, and I'm on the phone with Craig Cody. Craig is a certified public accountant, certified tax coach, and business owner, former New York police officer. Man, you've got all kind of experience, Craig.
Yeah, it's been a fun ride.
Sounds like it. Well, most of the agents that are in real estate, well, the people that are in real estate agents that really work, all of them are real estate agents, and being an accountant, you probably have dealt with our profession before, and realize that we wait to the last minute on literally everything. and we prepare as little as possible. So I tell you what, you want to tell us a little bit about yourself, what a tax coach actually does? And,
Sure. Okay. I'm a CPA, a certified public accountant. I'm also a certified tax coach. I'm a business owner, and as you said, I was a former New York City police lieutenant. I've actually retired about almost 18 years ago. In addition to being a CPA for the past 15 years, I've been a certified tax coach for the last 6 years. And what a certified tax coach does is there's probably about 100 of us throughout the country, and we do a lot of training on tax planning, which is basically looking for legal ways for clients to keep more of what they make. I've co-authored an Amazon bestseller, Secrets of a Tax-Free Life. And my most recent book is the 10 most expensive tax mistakes that cost business owners thousands.
Yeah. And that book is actually, I put the link on here on Facebook, but that book is actually free or that report's free on your website, right?
Correct. If you go to, we're going to give you a landing page, which is basically craigcodyandcompany.com / Jason Morris. And there'll be a link to click there.
Craig Cody. Actually, I've got it in the description. That's on the Facebook Live. So, Craig, if we wanted to hire a tax coach, so your job is you actually go out here and you help us come up with a tax strategy. So, being a real estate agent, or being a self-employed profession, what do you feel like what should I be doing? Like as an agent, let's say I'm making, let's do $50,000 to $75,000 a year. What should I be doing with my taxes? Should I have a tax structure like an LLC or C Corp or anything?
Well, there's been some recent case law that made some changes to the old adage where real estate professionals would create an S corporation and they pay the income to the S corporation and thereby save some self-employment tax. There was a recent court case that kind of basically invalidated that way to do it. So what basically agents should be doing that most of them are not doing is planning, taking some time to figure out, okay, what can I do legally that's going to save me some taxes?
What should we be doing legally? Should we even worry about having a corporation?
Depending on the amount of money you're making, it may or may not make sense. That's kind of an individual type of decision. But what should you be doing? You should be communicating with your CPA. All right.
Yeah.
Unfortunately, most CPAs are more reactive than proactive. They're looking in the rearview mirror instead of looking forward. They're putting the right numbers in the right boxes, but they're not being proactive. So you want to communicate with somebody, and you want somebody that's going to basically be proactive for you, help you look for ways to save you money. So most accountants, tax planning is, okay, we'll talk to you in December, see how much money you made, what's your tax bill going to be. You need to make this payment by January 15th.
Yeah.
That's being reactive. We like to meet with our clients throughout the year and do a tax plan. And basically what the tax plan is, it's a layout that tells you, okay, you need to do A, B, C, and D. And by doing A, B, C, and D, you're going to save X amount of money a year in taxes because these are legal deductions that you're not taking.
Yeah. That's interesting. So like, and I've had that problem in the past before where I've done I do a lot of stuff in the real estate business. I sell real estate. I coach agents. I write books. I've got a lot of income coming from a lot of different places. And sometimes it gets confusing. Honestly, my tax situation is a little complicated. Or even seems complicated to me, sometimes. But then, fortunately, I've had a lot of write-offs. So that threshold to where like, hey, I should go out and do an LLC. Do you think is it at 100,000? I got an accountant before tell me like 50,000, but I don't feel like 50,000 is a lot nowadays. Like I feel like if you're an agent making only 50,000 a year, then you probably need to like reevaluate your goals and stuff.
Right. Well, I mean, if you're forming an LLC, you're basically doing it for liability purposes. I'm not sure, I'm not an attorney. I'm not sure. And that's a state by state issue. How much liability protection it actually gives you. So I'm not sure where an LLC is going to, help you out. But the old adage was, you'd have an agent making, well north of $100,000, and they'd have a corporation and they'd take a salary and they'd save some self-employment tax. But like I said, there's been a recent court case that's kind of, changed that whole situation. So, but what can agents do? What can agents do? Okay. Yeah. Agents that are making money can have what we call a medical expense reimbursement plan. And what that does is it lets that agent, let's just say they have a child that's going to be getting braces. If they do it correctly, they could actually write off the cost of those braces.
Really?
Another thing we see is, with older clients where maybe they're having a little cosmetic dentistry done, you could now write off the cost of that, that medical work, where typically it is deductible, but it has to exceed 10% of your adjusted gross income. So it's deductible, but you get no benefit of it. Whereas when you have a medical expense reimbursement plan, and if you do it correctly, now all of a sudden it becomes deductible, and you do get a benefit from that.
Really? So a medical expense reimbursement plan, is that like a health savings plan?
Nope. It's totally different. It's easy to implement and maintain. And it's typically, we see it a lot with clients that are sole proprietors, single member LLCs, no employees. It's something that works for them.
Really? What do you think about like self-directed IRAs? And I think there's the self-directed lets you put $5,000 a year.
Six or 65 is it this year? But yeah, we have a lot of clients that are using self-directed IRAs. They're using it, and they're basically funding real estate deals in it, or they're loaning it out, and they're basically taking a mortgage on some maybe they're dealing with a flipper. Yeah. So they're loaning them $50,000 at 10%, and it might be a 6 or a 9-month short-term loan. And that's how they're using their self-directed IRAs.
What about there's another IRA, gosh, it's slipping my mind right now that I was thinking about it, that I was talking to Equity Trust Company about the other day. And is it a SEP IRA?
Well, there's a SEP IRA, there's 401ks, they're what they call solo 401ks. There's a whole host of different things, but you could pretty much make them work the same way as a self-directed, depending on who your custodian is. So you may have to work with a specific custodian, but you could get that deduction and still go ahead and, use that money for your real estate investments, et cetera.
Is there one type of those plans that you recommend? Like I'll tell you, for my situation, I know we got people on here watching and stuff, but for my situation, like honestly, like $6,000, being able to offset the taxes on $6,000 for self-directed IRA or $6,500. I mean, that's fantastic because it's $6,000. But honestly, $6,000 like in 2017, to be honest with you, man, it ain't going to help me a lot. Is there another retirement plan you'd recommend?
For a 401k, if you could do up to $52,000 if you're doing it right. But like I said, these things just take a little bit of planning.
Yes, sir.
So 52 versus 6, right?
Oh yeah, see, like 52, that'd make a big difference in what I'm going to pay in taxes. And 6,000 isn't going to make that much of a difference, you know.
And it also depends on how much money you're making. That makes whether it's worthwhile to do or not.
Yeah.
So
now, how should I be? You're a certified tax coach. How should I be looking? How should I be handling things with my CPA, or how should agents be handling things with their CPA?
They should be communicating with their CPA.
How often do you think is like a reasonable time to meet with them? Should we meeting once a month, once a quarter?
Well, we like to meet, and we typically do our meetings via Zoom or WebEx with our clients on a monthly basis. Maybe on a real estate agent, you might be able to go once a quarter, but you should be definitely communicating.
Yes,
All
sir.
right, on a regular basis. So, the doctor doesn't call you up and say, "How are you feeling today?"
Yeah,
You need to
that's
call
right.
him and make an appointment. So it's the same thing. You need to communicate with your CPA, and he needs to communicate back.
Yeah. What if you don't have a CPA that you're communicating with? Like I'll tell you, like right now, in my business, I've been kind of looking around for a CPA that really understood the real estate business and understood my business, And some of them I talked to, I just didn't feel like I understood the real estate industry or didn't understand, like, hey, I've got these properties over there. They cost me a lot of money sometimes. There's a lot of expenses that go into them. What should we be doing to find that CPA?
You should be asking them questions. It comes back down to communicating. What do you know about real estate? Do you have clients in the real estate field? What kind of experience do you have in the real estate field?
Sure.
Do you have investor clients? Do you just deal with real estate agents? Are you aware of how a cost segregation study works? Stuff like that. And and I tell clients, when was the last time your CPA came to you with an idea to save money?
Oh gosh, I've never had one call me
Okay, so
about
maybe it's
saving
time
money.
to say next and look for somebody else.
Yeah, I've never had one say, "Hey, Jason, look, I think we can save you money." Usually, it's been honestly with the CPAs I've had, it's been me going to them, going, "Hey, man, I've got all these expenses. I read online that I could take these off my taxes. Is that true?" you know, I've had that conversation with CPAs in the past. Well, Craig, I got a handful of questions for you. I find that real estate agents, like a lot of them, that when they talk to me about their tax situation or something, or when they mention their taxes, it's usually that they are behind in taxes.
Right, right.
You know, what should they be doing in that case? Their CPA isn't helping them, or they don't really have a CPA, and they're panicking because hey, they didn't pay in last year, and now they owe $25,000 or whatever. What should they be doing?
Well,
Like, what can a tax planner help them do in that situation?
Well, a tax planner can help you going forward. We do a lot of work, and in the real estate agent field, there's a lot of work in the what we call the tax resolution side of it. Whereas, they owe 20, 25, 30, or $50,000. Okay, their income is kind of sporadic, so they did no planning. They owe all this money. Now they're getting notices from the IRS, or they expect to get notices. What can they do? So we do work with those clients to get them straightened out.
Yeah.
So somebody that does what we in the business we call tax resolution work.
Yeah. What if they haven't filed for several years? I've talked to agents in that situation too. We get 1099 at the end of the year, and sometimes there's agents they place in their pile of junk that's on their desk, and 6 months later they haven't filed. They haven't filed an extension. They haven't done anything.
Right. So they need to get you need to get compliant, which means you need to be caught up.
Yeah.
So typically we'll get an agent come to us that they either owe a lot of money or they've made a lot of money the last couple of years, but they haven't filed because they haven't had the money to pay the taxes. So we'll get them caught up, and then we'll get them set up on some kind of a payment plan. Or sometimes, they'll need to make an offer and compromise that is, where you're able to actually pay the government less money than you actually owe. That doesn't happen too often because if you're making money, it's typically not something that works.
Yeah. Do you see? Yeah, a lot of agents, we're in a profession that's kind of funky. It's like feast or famine for a lot of us. You know what I mean?
Right.
Either we're rolling high and buying new cars and fancy watches and stuff, or either we're like rolling pennies to pay the light bill.
Right.
With the offer and compromise, do you see the IRS accepting significantly less, or it just depends on what you got, I guess?
It really depends on what you got, and
so it's like a hardship situation.
Right. And we tend to not work with the clients that are in a hardship, situation, because we're working with business owners and, people that are making money. So they're typically not in a hardship situation. They just need to dig themselves out of the hole.
Yeah, I understand. There's a lot of that where I see where agents need to just dig themselves out of the hole, and they just can't really get seem to get ahead. Do you recommend though in our profession? Do you recommend buying real estate as a something that we can depreciate and having our tax plan or that part of our tax plan depreciate and expense that sort of stuff?
It really depends on what you want to do. Obviously, real estate professionals are typically more inclined to purchase real estate because that's what they do for a living.
Yeah.
But sometimes people, they don't understand the way it works. Are they actually allowed to take the deductions that bring them down to zero, and do they get the benefit of those that bring them down below zero? So there's a lot of misconceptions out there sometimes where they think, well, I'm doing this and I have this big loss, but am I getting the benefit of it?
Yeah, because not all losses you can completely deduct, can you?
Correct.
What do you think is what do you think's the biggest deduction that we should be taking that most agents are missing?
Oh, I would say the medical expense reimbursement plan is one of them. Okay. Another one would be not taking a home office deduction.
Yeah.
If you work out of your home and you have a home office.
I had an accountant one time advised me not to do it because he told me that it could possibly trigger an audit.
I've heard that once or twice myself. The IRS came out a couple of years ago with some guidance from what they call like a standard that you can use, a safe harbor. But here's the bottom line is if you have a room in your house that you're using exclusively as your home office and you could document it, why not take it?
I agree with you. I agree with you.
That also opens up a whole host of other things that you're legally allowed to do. You can have an on-premise athletic facility, which could be your home gym or it could be your pool.
You can take a home gym off your taxes.
If you have a bona fide home office, yes.
No kidding. So you could do a home gym too and a swimming pool?
Correct.
No kidding. Nobody's ever told me that.
Yeah.
What about like I pay an HOA fee and as part of that I get access to a swimming pool and stuff like that. Would that count for me?
No, that wouldn't work.
That wouldn't work. So it has to be like my swimming pool in my backyard.
Correct.
Man, that's amazing. Like I know a lot of us know all the easy ones like one of the easy ones I find is mileage. I mean, I put an insane amount of miles on a car a year. I mean, I wouldn't be surprised, man, if I go back and look, I probably put 35,000 miles on a car this year driving. It's like I'm always in the car driving somewhere. And that seems to be like the big one everybody knows about, is the mileage deduction. But I didn't know that there was the medical expenses. I didn't know the home office I've done before. Fortunately, I've never been audited, at least not before this this podcast. What are some red flags though that they see that you see agents doing that you're like, oh man, they shouldn't be doing that. That's bad.
Well, you need to document everything you do. If you're not documenting it, you're going to have a problem because eventually you're going to get a notice or you're going to get an audit or something, and you're not going to be able to prove it. So what's the sense of doing it if you can't sleep well at night?
That's right. So we need to document all expenses.
Yep.
It doesn't matter what it is. We need to document it. I'd be willing to bet though most agents out there, they don't have they never do like a check. They never do like a balance sheet, and they never actually go through, and they don't have anything set up like QuickBooks where they can join it with their checking account and actually see everything that's real expenses.
Yeah. I mean, that's partially correct. It's got to be run like a business. And if you're running a business, you should have a profit and loss. You should have a balance sheet. You should have all the things that you're supposed to have.
Yeah. And then we should be documenting. I got a question here. An agent asked, what about new tires on a car? Can you deduct new tires and oil changes?
Well, it depends on if you're taking the mileage rate. No, because the mileage rate encompasses everything. If you're not taking the mileage rate, yep. And let's just say you use the car 90% for business. So you get to take 90% of the tires and 90% of the oil change. But you need to document the usage.
You need to document the usage. What if you have a car that's really only used for business purposes?
Then you could use 100%.
That makes sense.
You still need to track your miles because if the IRS comes looking, they're going to ask you for your log, and there's a number of apps out there that you could use these days.
Yeah. I've got all kind of, I could just sit here and ask you questions over and over. I see a lot of agents though in these groups asking about leasing a car versus buying a car. Is there any real advantage to the lease?
Well, a lease, typically you get to a bigger deduction up front than you would if you purchase a vehicle, unless it's a big SUV. The problem with a real estate agent that's doing 35,000 miles a year on a lease is if the lease is only for 15,000 miles a year.
Oh, it'd be insane.
Exactly.
Yeah.
So it's something you have to be aware of.
So let's say I wanted to lease a little bit nicer car because I'm in the process right now. I keep looking at cars. I got car fever, correct? And that's the truth. I keep looking at them and going, oh man, I don't want a payment or I don't want this or that. But and one of the things I've thought about in my mind is like I feel like I got to go out there and buy, right? Because of the mileage. But I don't really want to get rid of my old car I got. I got a Jeep Cherokee. I don't really want to get rid of it. You know, it's comfortable. It doesn't look bad. It's just getting a lot of miles on it and stuff. But buying a new car doesn't give me like a bigger mileage deduction. But if I go out there and decided I wanted to lease a car to drive, you know, just say for important things like meeting clients and stuff, you know, my old Jeep, I can drive that to put out my signs and do all my little running around errands and things like that. Would there would be so there would actually be an advantage to that lease?
Well, it could be, depends on the usage, how much, you know, are you using only 10% for business because you're only using it sparingly?
Yeah.
Or, you know, so then you'd only get 10% of that lease as a deduction.
Okay. That actually makes a lot of sense. So yeah, I'd have to prorate it the same way as mileage. I wouldn't get to take it all off.
Correct.
What about office supplies, things like that, things that I'm buying, you know, a new laptop, things like that?
That should all be deducted or depreciated, yes.
Okay. And well, I tell you, Craig, I appreciate you answering some questions for us. I know there's a lot of things that agents have and stuff. What so if somebody wanted to hire a tax coach, what's involved with that?
Well, typically what we do is we have a short phone call because we have clients all over the country. Then we'll have a client will send us their last year or last 2 years worth of business tax returns and personal tax returns. We'll do an analysis, then we'll set up a call and we'll take about 20 minutes and go through the analysis and see if it makes sense, if there's the ROI for them is worthwhile to do a tax plan.
Yeah. And typically, so do they need a tax coach and a CPA, or can they just hire you and you do it all?
Well, we are CPAs and tax coaches, so we do it all.
Yes, sir. So you guys do it all. So you guys, I would, if I wanted to hire you, I'd send you all my stuff. You guys would evaluate it, see what the ROI is, and you guys would come up with a tax plan for me, and then we'd talk on a monthly or quarterly basis, depending on what my needs are. And how much would something cost like that to do a tax plan?
It honestly it varies, but the typical plan is somewhere between 3,500 and 8,500, and the typical ROI first year is over 400%.
Wow! So you guys could actually come up with a plan because, you know, I know a lot of agents are on that edge, Craig, where they're you know, they're out there selling real estate and they see these guys flipping property, right? And, you know, of course we watch HGTV like crazy. So, you know, and we think that, you know, some of this stuff is real that we see on there, but we're watching all this stuff and we're going, man, you know, like if I could just be like, you know, what's his name on Flip This House, you know, where I'm so close, I'm representing clients and they're making money doing this. There's so many agents that are on the edge where they want to make that jump into flipping property and they want to make the jump into rental property because they're seeing their clients do it. You know what I mean? So they should probably call you and talk to you and figure out all the benefits, or maybe there's not any benefits for them to do that right now.
Exactly. Yeah. And it all starts with a tax plan, and we see whether it makes sense for them to. You know,
they need to plan.
If we could provide some value.
They need to decide what they need as far as retirement accounts. I think that medical expense reimbursement plan, man, I got to get some more information on that because I have not really been concerned with medical expenses. I mean, I'm pretty healthy. I don't really ever have to go to the doctor, you know. I mean, and you know, hey, I just haven't really worried about that. But I guess if I do, you know, if I needed something, I guess more major, more expensive, you know, knee surgery or something random like that, that would actually be like a really good thing for me.
Correct. Or if you needed braces, or if you needed some cosmetic dentistry.
Yeah. Or
Yep,
if my child needed braces.
that exactly.
Yeah. Man, so Craig, I tell you, I want to ask you, what other advice would you give agents right now, especially brand new agents just starting? Like basically they're brand new business owners.
Don't spend more than you're making, and take a chunk of every check and put it aside for taxes.
That's awesome, man. What do you think's a safe amount? Like I've heard 20%, I've heard 35%. What do you think's a safe amount to put in there?
I would say, depending on if you're just starting out and you're putting away 25%, that's a good safe number, and hopefully you'll have some money left over at the end of the year. So consider it like a forced savings.
That's fantastic, man. Well, I really appreciate you doing this call with me today. If somebody wanted to get in touch with you and talk about this tax plan, how would they contact you, Craig?
They would contact me. My email is craig@ccodycpa.com, and our office number is, I'll let you write that up there.
Let's see, Craig at CCody
CPA.com. And the office number is 516 869 4051.
4051. And you've got a book too. I'd like for you to tell them real quick again about the book, the actual 2 books, so I can write it out here.
Sure. It's Secrets of a Tax-Free Life.
Secrets of a Tax-Free Life.
That's on Amazon. And the second is the 10 Most Expensive Tax Mistakes that cost business owners thousands.
And that is the one that is on your website, is it?
Correct.
Awesome, man. Well, I really appreciate it, man. If I can help you do anything, Craig, just give me a call. Let me know.
Oh, thank you very much for having me. Appreciate it.
Hey, thanks so much.
Take care.
Oh, you too.
Bye-bye.